Hi there, viewers. Welcome back to the Money Show. Now, there are plethora of funds to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio? What are the criteria that one should look at? To help you navigate through this maze, we have Pankaj Mathpal, the MD at Optima Money Managers, joining us. Before we go across to him, also viewers, do not forget to send us your portfolio queries on our WhatsApp number 865-797-4571. Or remember, you can also email us your queries on the Money Show at etnow.tv. But Mr. Pankaj, hi, thanks so much for joining us on the show and extending the best of the festive greetings as well as a very happy new year to you from all of us here at ET Now.
Thank you very much, Snehi. Wish you a very happy new year to you and all the viewers of ET Now. Snehi, see, considering that he's investing 1,25,000 rupees per month with 10% step up every year, if we assume 12% CAGR, he can expect around 23 crores in 20 years. So his target is 20 crore rupees, which he can easily achieve. So he can continue with his SIP. He has all the schemes what he has in his portfolio are good, but because he has mentioned that he has moderate to high risk appetite, so my suggestion that as he has one hybrid fund, SDFC Balance Advantage fund in his portfolio, he can switch from this fund to pure equity funds, and he doesn't need to add any new fund. Like he has Kotak Emerging Equity Fund and Motilal Oswal Large and Mid Cap Fund, so he can switch from hybrid fund to these funds. That will be better choice for long.
Okay, Mr. Mathpal, thanks for that view coming in. Next query coming in from our viewer Darshan from Bengaluru. His query is that he has 5 lakh rupee corpus which he wants to invest in mutual funds. He has received the following recommendations after inquiring around, and some of the names that have been recommended to him are Motilal Oswal Mid Cap Fund, Kotak Equity, HDFC Large and Mid, ICICI Large and Mid, SBI Contra, Kotak Multi Cap Fund. So this is what he has been recommended. What do you think about all of these schemes? Do you think he should start investing his money over here? He has a 5 lakh corpus. The first part is how would you recommend a split between all of these schemes? And the secondly, are all of these schemes good, or would you suggest some alternatives when it comes to his investment portfolio?
See, there are two things one has to understand. One, whether schemes are good or not. Second thing, whether the schemes are suitable for the particular investor or not. See, he's 65 years old. All the schemes are well diversified equity schemes, but as you can see, these are mid cap or small cap funds or other diversified equity funds. So at 65 years of age, we do not know much about the viewer, but still considering age, I feel that he should invest in hybrid funds, where he gets stability in his portfolio as well as he can expect growth. So my suggestion that instead of investing in this scheme, he should invest in some hybrid scheme. And I can recommend some names like ICICI Prudential Asset Allocator Fund of Fund, White Oak Multi Asset Allocation Fund, and SDFC Balance Advantage Funds. So these will be, I think, better choice considering his age. Otherwise, and a second thing he has also mentioned, I think that he wants to invest something like 5 years or so, or I don't know if he wants to invest for a long term, something more than 10 years, then he can consider diversified funds. But otherwise, as the information we have with us, my suggestion that he should invest in hybrid funds. Second thing, whether he should invest now in lump sum because markets are volatile. He can invest through STP route in staggered manner. So in STP route means we invest the money initially in some low risk debt funds like liquid funds, and from there you set up every week or every month a fixed amount will be switched from the debt fund to equity fund. So in that way he can invest the complete this 5 lakh amount in next 3-4 months.
Okay, sir, thanks for that view coming in. Next and last query that we'll be addressing on the show today is coming in from our viewer Padmavati, who's writing to us from Salem. And the query that she's asking you to suggest funds for a 5 year period for 15 lakh rupee corpus. Now, she wants to invest 1.5 lakhs in lump sum investments out of this. Is this the right time to invest, is what she's asking? Now she's saying that this amount is for her daughter's marriage, and she's just 10 years old right now, her daughter, so she's pretty young. So the time frame is also quite significant. Could you suggest her some funds? How many funds should she diversify across? She has already invested 50,000 rupees lump sum in Bandhan Small and Motilal Mid Cap equally. She also has two SIPs running, UTI Momentum, Nifty Next, and SBI Digital Innovative Fund. She has started these 2 months ago, and the funds are for the long term time frame of 10 to 15 years as well. She's asking if she should change something. Should she go via the lump sum method in all of these rather than an SIP a way of investing? What's your recommendation on the schemes and also her method of investing going ahead?
See, this Padmavati has a long investment horizon,
Hmm.
but still, if you see the portfolio, she has one thematic fund, SBI Innovation Opportunities Fund, and another fund is like she has Momentum Fund. So, for long term, diversified equity funds are more suitable because momentum works when there is when the market is doing means there is a rally in the market. So, momentum funds will perform better. And secondly, thematic funds because themes or sectors keep rotating. So, during a particular period, you can expect that thematic funds will perform well. But when you plan for long term, you should invest in diversified funds like large cap, mid cap, small cap, or multi-cap, flexi-cap, that kind of funds. So I think her choice is not good, but still, like HDFC small cap fund, what she has in her portfolio, that is good for long term. For SIP, I would suggest that she should consider mid cap fund and a small cap fund she has, mid cap and large cap she can add to her portfolio. And for lump sum, what she has right now, this 1,50,000 rupees, she can invest in ICICI Prudential Blue Chip Fund, which is a large cap fund, and Bajaj Finserv Flexi Cap Fund. So equally, she can divide this amount in two parts, in two schemes. And in 5 years, if we expect 12% CAGR, we assume that she can expect around 12 lakh rupees. Her target is 15 lakh. So to achieve 15 lakh in 5 years, she should increase her SIP amount to 15,000 per month. And rest as whatever lump sum she has, she can invest in staggered manner.
Okay, Mr. Mathpal, thanks for that view coming in. Padmavati, I hope that answers your query. Viewers, remember to keep writing us on our WhatsApp number as well as our email IDs that will be flashing for you on your screen. But on that note, Mr. Pankaj, thank you so much for joining us. We'll let you go. And once again, the best of the Happy New Year wishes to you. But on that note, viewers, I'm afraid we'll have to wrap it up on this edition of The Money Show. That's all the time we had today. I'm Snehisha. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.